Nvidia CEO Jensen Huang has once again found himself at the center of the global technology and trade debate as the company's China operations face mounting uncertainty ahead of its upcoming earnings release on Wednesday, August 26. Huang, who has spent decades building Nvidia's brand as a global leader in artificial intelligence (AI) and graphics processing, stressed in remarks earlier this summer that China remains essential for the company's future. Speaking at a news conference in Beijing on July 16, 2025, he described China as both the world's second-largest technology market and one of the fastest-growing, home to very dynamic and innovative customers. Huang explained that any company hoping to thrive in this sector must not only build excellent products but also foster strong relationships with demanding customers. At the same time, he acknowledged the challenges posed by tariffs and shifting global trade conditions, noting that Nvidia has had to adapt before and will continue to do so in the face of regulatory and political headwinds. Those headwinds have grown sharper in recent months, as Washington and Beijing continue to clash over chip exports, security concerns, and technology dominance. Nvidia struck an unusual agreement with the Trump administration earlier this year, agreeing to pay 15% of its China sales directly to the U.S. federal government in exchange for export licenses that allow it to keep shipping advanced chips into the Chinese market. The deal has drawn bipartisan criticism in Washington, with some lawmakers questioning whether it sets a dangerous precedent. Meanwhile, Beijing has reportedly urged domestic companies to limit their reliance on Nvidia products, citing security worries. Sources told Reuters that Nvidia has already asked some suppliers to suspend production of its China Special H20 chips, though the company is said to be developing a new and more powerful processor tailored for Chinese clients. The financial impact of these restrictions has been significant. Earlier this year, Nvidia warned that export curbs could shave as much as $8 billion from July quarter sales, following a $4.5 billion charge it booked in the previous quarter. Even so, demand for Nvidia's cutting-edge AI chips remains extremely strong globally. Analysts polled by LSEG expect the company to report second-quarter revenue of $46.02 billion, a 53.2% increase year-on-year, although that growth is a step down from the triple-digit surges Nvidia posted in earlier quarters. Investors will also be watching closely for Nvidia's third-quarter guidance, with current forecasts estimating $52.96 billion in sales, up 51% from a year earlier. Of that, as much as $6 billion could come from China, according to Piper Sandler analysts, though margins are expected to tighten significantly. Bernstein Research estimates Nvidia could lose between 5 and 15 percentage points on China-bound chips due to the federal revenue-sharing arrangement, cutting roughly 1 percentage point from overall corporate margins. Beyond China, Nvidia's AI business continues to boom. Tech giants such as Microsoft and Meta have expanded capital spending to secure more of Nvidia's GPUs, which power not only data centers but also the next generation of AI platforms and personal computing systems. Huang used his CES 2025 keynote in Las Vegas to unveil the GeForce RTX 50 series Blackwell GPUs, built on an architecture boasting 92 billion transistors, 4,000 tera operations per second, and 4 petaflops of AI processing, 3 times more powerful than its previous Ada generation. He also introduced the Grace Blackwell GB10 superchip, marketed as a personal AI supercomputer that can function as a cloud computing device, Linux workstation, or high-performance PC system. These announcements have kept Nvidia at the forefront of the AI revolution, reinforcing its position as the world's most valuable chip maker. So far in 2025, Nvidia shares have climbed more than 33%, a slower pace compared to its explosive gains in 2023 and 2024, but still well ahead of the 15% rise in the broader chip index and the S&P 500's roughly 10% increase. Analysts say Huang's tone during Wednesday's earnings call will be crucial. Upbeat commentary on AI demand could re-energize the sector after recent market pullbacks, while any caution on China could weigh heavily on investor confidence. For Nvidia, the balance between political realities and technological leadership may determine not only its financial trajectory, but also the future of AI innovation worldwide.
I hope to have a great future here. Nvidia has been coming to China for 30 years. As you know, China is the second largest technology market in the world. And it is also growing very quickly. And so this is a very important market. There's a lot of very dynamic and innovative customers. If you want to be a good supplier, a good company, you have to have excellent customers as well as excellent products.
Write-off because of the previous ban and
tariffs. the world is reconfiguring itself, and we are a company, and we just have to adapt to whatever the world's trade and tax and tariff conditions are. There were trade, taxes, and tariffs before I came into Nvidia. There will be trade, tariffs, and taxes after I leave Nvidia. And so this is something we all have to adapt to.